Hi, I'm Ken W. Chow. In this exciting webinar, I'm going to show you how to turbocharge the butterfly pattern with trend strength. I'm going to show you how trading is like solving a puzzle. You're going to learn how to trade without any indicators and how to read price charts the easy way for big profits. You're going to trade profitably like you're playing a simplified version of the game Wheel of Fortune. Well, let's start that game right now. Can you guess what this word is? Of course not. You don't have any clues yet. As you wait for the clues to show up, you can take a stab at it, let's say right here. But you may not get it right because it could be this word, or this word, or this word. The reason why you did not get it right was because you did not wait for enough letters to come in. As more letters come in, you will have a better chance at guessing what this word is, but you may still not get it unless you wait until a lot of the clues are in. Now you can actually take a guess at it and you're more likely to be right. In trading, you don't need to guess prematurely. Get as many clues as possible to confirm before entering the trade. That's how I see trading, like solving a puzzle. Trading a winning butterfly chart pattern is like waiting for almost all the pieces of a puzzle to be revealed before placing the trade. In my opinion, the butterfly pattern is the most powerful, accurate, and reliable pattern to trade turns in the market, bar none. And I'm going to show you how exciting and easy it is to grab profits on a regular basis using the butterfly. You might be asking, why is that? Why is the butterfly pattern so powerful? In this presentation, I'm going to answer a few questions. First, what is the butterfly pattern? Number two, why does it work so well? And more importantly, how can we improve it even further? First, let's see what is a butterfly pattern. How is it built? In fact, what is the building block of all chart patterns? Well, it's the measured move, a simple zigzag pattern. Measured moves are like the letters used to solve that puzzle. Here it is. This is the measured move. It is said that CD should equal to AB. This is a bullish measure move because we have higher lows, higher highs. C is higher than A, and D is higher than B. The measure move is useful because it shows us trend strength. You will learn how to tell whether the market is bullish or bearish. You will also know when the trend will likely continue or reverse once you understand the measure move fully. Going back to this measure move, let's focus in on C. That's the most important part of the measure move because the BC leg is the retracement of the AB move. Now, point C is important because it shows us trend strength. If point A is down there, point D has to be up there to make this equation hold true. Another way to look at it is this. Here we see a very deep retracing point C. The BC drop almost dropped prices to the low of A. So point D should be just slightly above B. But if the BC drop is very minor, then point D should be much higher to make AB equal CD. In a bearish environment, we have the BC as a bounce against the AB move. So again, point C is very, very important. Looking back at point A, if point A should be way up there, point D needs to be stretched down here to make this equation true. Looking at it another way, the BC move is a big bounce against the AB drop in this situation. If the bounce is very minor, point D would get stretched out to way down there. So what we can say is this: the deeper the retracement at point C, the weaker the trend strength. The shallower the retracement at point C, the stronger the trend strength. All chart patterns are constructed from many measure moves attached together. Let's look at the first configuration. Here we have a bullish measure move. Now, this CD leg will start another measure move. Here we have the blue measure move following the red one. We always want to ask the question, how deep are those pullbacks? Here's a bearish measure move. The CD leg, shown in blue, starts off another measure move going down. Here's a chart example. As you can see, I use simple bar charts. Here's the first bearish measure move, and the next one follows it, shown in blue. So the first configuration is when you have measure moves in a series. 2 measure moves or more attached end to end. Now here's the second configuration. This is much more interesting. You have a bullish measure move. This CD leg shown here gets broken down into yet another measure move. Now this blue measure move is encapsulated within this red one. The blue measure move is nested within the red measure move. The way you can tell is that blue point B is lower than red point B when you have 2 measure moves as such in a bullish situation. I call this a measure move within the measure move. The blue measure move is within the red measure move. So if I look at red point B and call it red X instead, just so we can differentiate the 2 points B, then this would be the making of a bearish butterfly to be shorted at point D. A measure move within a measure move pattern indicates weaker trend strength as compared to measure moves in a series. And if the inner measure move has a deep point C, there's probably a butterfly forming. Let's look at a bullish example. Here we see the blue measure move nested within the red measure move. In this case, blue point B does not drop lower than red point B. This would be the bullish butterfly with a buy at point D. Quick summary of measure moves working together. Here you see 2 measure moves in a series. Now the blue measure move here is within the red measure move when you see this configuration. Here you see 2 measure moves in a bullish configuration, and these 2 are in a series. Here the blue measure move is within the red measure move. Let's look at a chart example. This blue measure move is within this red measure move, making this a bearish butterfly short. Why is the butterfly pattern so powerful for trading market turns? Because it shows weakening trend strength in 2 ways. First, it is a measure move within a measure move. That in itself is a weakening chart pattern than measure moves in a series. Secondly, we want that retracement at the inner measure move to be very deep at point C. Let's look at it again. Here is a downward measure move in blue. If this happens to be a measure move within the red measure move and its point C is deep, then we have the making of a good butterfly pattern. Can you see the butterfly pattern here? Here is the blue measure move within the red measure move, and its point C, shown here, is deep. This will set up a good bounce for you at point D. Here's a bullish measure move going up. Now it is encapsulated within the red measure move, and if we see a deep measure move as such, you have the making of a very good bearish butterfly pattern to short at point D. Let's look at how to determine where the actual turn will likely be. We use Fibonacci ratios because Fibonacci ratios are found in nature and markets are natural phenomenon. Therefore, Fibonacci ratios work extremely well in trading. Now, I'm not going to get into the exact reasons or the theories as to why it is so. Here you have a move from X to A, and as it unfolds, you have a potential buy at point D. Here's how you apply Fibonacci ratios to determine where point D would likely be, the turn at point D. Take the XA range and we use the 127% extension of that range, the XA range, and we drop it down off of A. Next, we will take the BC range and extend that 161.8% down from C. The average of these two extensions will be a good place to go long at point D for the turn. Here's a chart example. Notice how deep point C is, and notice how the two extensions pretty much fall on top of each other, giving us an extremely accurate buy at point D for a nice move up. By the way, the target will be above A, sometimes a lot higher than A. Here's another chart example. The XA range gets the 127 extension, and the inner BC range gets the 161.8 extension for a buy at point D to go long. Let's look at a bearish example. X drops to A, and then we have this measure move within the previous measure move. We're going to extend up. We will take the XA range and extend up 127% off of point A. The inner BC range gets the 161 extension off of point C. The average of these two calculations give an entry price in which you can go short at point D. Here's a recent chart of gold. Notice how these two extensions give the turn right around 1163 for a nice drop. Again, the profit target is below A, around 1150 for a $13 drop for gold. Now here's the exciting thing you're going to learn. How to improve a butterfly pattern even further for more accuracy and reliability. What we want to do is use overbought, oversold chart patterns at the reversal zone for confirmation. Okay, so what does an overbought, oversold signal look like? Let's take a look at the good old measured move once again. And yes, we talked about how AB equals CD. Now in the real world, this is not always the case. Sometimes the CD leg is much bigger than AB. In this type of situation, this market is overbought and very likely reversed. Here's a bearish measure move, again with a deep point C. A lot of times you're going to get the CD leg stretching bigger than AB. When that happens, we can say that this particular pattern is showing an oversold situation where you might expect a bounce. So the first way to confirm a butterfly is to look for additional supporting overbought, oversold measure moves extending into the preliminary butterfly reversal zone. This will give support. This will give reinforcement to the butterfly pattern. This is a bullish butterfly pattern. What we're going to look for is that CD leg to be broken down into yet another measure move, shown here in purple. Now this purple pattern is that supporting structure that we want. This is that pattern where you're going to have a deep retracement and its CD leg bigger than AB. This purple pattern is what we want to support and reinforce. The more supporting measure moves you have, the more reliable the butterfly pattern. Let's take a look at some chart examples. This is a 1-minute chart of crude oil. Can you spot a butterfly setup? There it is. Let's zoom in a little closer to take a better look. Here you see the inner measure move of the butterfly pattern. We do have a deep point C here, and here are the calculations for you to go long. Notice how the CD leg gets broken down into this purple pattern. This is a very good supporting structure to help out this bullish butterfly. Now you might say this has overshot the average, but being a 1-minute chart, it only overshoots it by about 5 or 6 cents. The key point that I want to show you is this purple supporting measure move. It has a deep point C and the CD leg bigger than AB for good support. With good support, the butterfly pattern has an excellent chance of working. This makes it even more reliable. As I zoom out, you can see the magnitude of the bounce. Sure, you got in and it went against you 5 or 6 cents. This market went up about 70 cents. Can you spot a good butterfly pattern here? Yes, it is a bearish butterfly with a nice deep retracement at point C. Here are the two extensions, and the average of these two extensions gives you an entry price to short around 50.95. But let's take a look at that CD leg. Notice how it breaks down into that purple pattern. This purple pattern has a deep retracement and the CD leg bigger than AB. But wait, there's another supporting purple pattern which also has a deep retracement in itself, which also has a deep retracing point C, not shown here, and the CD leg bigger than AB. So with two supporting purple measure moves, this has an excellent chance of dropping. Now let me zoom out to show you how big of a drop this was. Wow. Although you got in within 15 or 20 cents of the high, this thing dropped about $3, 300 ticks. Can you spot a good bearish butterfly here? Oh, there it is. Now this one also has good support. In this case, that purple pattern is very, very useful to give you that zone to get in short. Can you spot a good butterfly pattern here? Although this looks choppy to the uninitiated, these two extensions give a zone in which you can buy. Here are the two extensions that you can average for your entry price to buy. But what's exciting is this purple supporting measure move. This confirmation gives you a lot of confidence to buy it in that zone. But look, there's another supporting structure here to help it out even more. As I zoom out, notice this huge bounce to the upside. This was the Canadian dollar reacting to the FOMC announcement back in March. Let's talk about the second way to confirm a butterfly. Zoom in using smaller time interval charts to look for a reversal as confirmation. Here is the cotton chart again. First, we'll look at the two extensions. They tell us to go long around 59.92. The question is that a reliable zone? Is this a reliable pattern to go long around that price? Well, we have a very good supporting measured move shown here in purple. In fact, there's another one here to help out. But what we want to do is zoom in, which means convert this chart from a 60-minute chart down to a 15-minute chart and focus in on what's happening as we get closer and closer into the zone, especially when we hit that zone, the zone of 59.92 give or take. As we zoom in even closer to a 5-minute chart, then something interesting is happening. You can see this market reversing. Let's go to the 1-minute chart. Here you can see the market actually making a move to the upside. This higher low, higher high pattern is proof positive that the market wants to turn up. If you were to jump in to go long around 60.20 even and put a stop below the low there, you will still have a small risk compared to the potential reward. Let me zoom back out so you can see what transpired in this market. Going back to the 60-minute chart, look where 60.20 is. Remember, this move has the potential of going above point A, which is around 61.60. But let me zoom out even further, and you can see how if you've gotten in at 60.20, you will still have a tremendous $4 move ahead of you. By zooming in, you can let the market turn around to give proof that the turn has happened. You do this when the butterfly shows up on a larger pattern. On a smaller pattern like we saw earlier on the 1-minute chart, just go ahead and buy it at the average, because when you're on the 1-minute chart, the pattern is usually small and the amount of risk is also small. Again, look for that great supporting structure shown in purple for confirmation. Okay, let's summarize. There are two ways to confirm the butterfly pattern. First, use overbought, oversold patterns. These are measure moves with their CD legs stretched out much bigger than AB. The second way is to zoom in using smaller and smaller time interval charts. I go all the way down to a 1-minute chart to look for confirmation. Let's look at some more chart examples. Can you spot a good butterfly pattern here? There it is. After a while, these butterflies will jump out at you. Here are the two extensions for your long entry. Can you spot some butterflies here? There's one, and here's a much bigger one. Again, it is the measure move within the measure move plus confirmation. Now you might think butterflies only work for small charts. Not true. Here's a daily chart of crude oil. Remember how crude oil fell tremendously in late November and late December of last year. Let me expand this so I can see what's happening currently. As I put the extensions down there, you can see how the supporting structure shown in purple with a deep retracement there came in to help out the zone. The actual average of this huge daily chart gave an entry price within a few cents of the actual turn. Let me update this chart to show you what has transpired. Wow, notice this huge bounce to the upside, a $6 move since it bottomed out the middle of March. Butterfly patterns work tremendously well on daily charts as well. In fact, they work in all time interval charts, from a daily chart to a monthly chart down to the 1-minute chart. So, conclusion, butterflies form at the majority of tops and bottoms. And number two, all butterflies work extremely well when we use confirmation. Now, there are several things you need to know before you can really trade well with the butterflies. You have to learn how to stalk a butterfly as it unfolds. You want to use confirmation for safety. We did a little bit of that. You also need to know when not to trade butterflies. In what environment would a butterfly fail? Also, it's important to know how to enter the order. Number 5, you also want to know where the initial stops and targets ought to be. Number 6, managing the trade is very, very important once you get in on a trade. If you miss the primary entry, how would you get in on a secondary entry? Number 8, for those who don't like Fibonacci ratios, you can also trade butterflies without using fibs. Number 9, what is the significance of back-to-back butterflies? And you may also want to know my personal secrets to day trading profits. Now you have a chance to take advantage of my advanced butterfly course. This course includes 3 recorded 1-hour videos showing everything that I just mentioned on how to trade butterflies effectively. Plus, you also get 3 private one-on-one sessions with me personally. These are one-on-one webinars where you can ask any questions you want to really clarify all the important points of trading the butterfly. After you've gone through this course, I guarantee you, you will know how to trade butterflies inside out and make money consistently once you follow all the rules. I'm also going to throw in a free bonus. I wrote an ebook called How to Pick Highs and Lows Accurately, Safely, and Profitably using 3 proven steps. I call it Superstructure Trading. Now I have the ebook plus the video companion. This set sells for $97 and we sell these sets every day. But it's yours free with enrollment today. Once you sign up for this course, you will get the ebook, the video companion, along with the 3 recorded videos to watch at home anytime you want to. And you also get 3 personal 1-hour sessions with me to clarify all your questions so you can really trade the butterfly consistently. The tuition for this course is normally $997. This is a fantastic bargain to learn one of the most powerful chart patterns there is, especially when you improve it even further using my powerful trend strength tools. But for a limited time only, I have a special offer for you. This entire course is only $297. That's a tremendous discount. Now, this is limited to the first 5 students only. At this low price, I will not take on any more students. It is simply not worth my while. I'm giving each student 3 full hours of my time, plus they have all the other resources of the videos, which explains it fully, and the ebook and video companion. Now, why am I doing this? I want to have feedback and testimonials from 5 students. So I want you to succeed trading this powerful pattern that I've been using to make consistent profits on a week-to-week basis. To get started, just email me or call me, and I'll discuss the details of how you can get started today. So again, the Advanced Butterfly course includes 3 recorded 1-hour videos, plus 3 private one-on-one sessions, as well as the ebook and the video companion videos for only $297. Email me at ken@superstructuretrading.com and tell me you want to get started, or call me if you have more questions or if you need more clarifications. I look forward to helping you become the best butterfly trader so you can make money consistently and earn profits week after week, month after month, year after year. This is a simple chart pattern that gets turbocharged with the supporting structures and other tools that I've developed. Give me a call if you're serious about turning your trading around once and for all.